Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, coming to you live from Exchange in Miami. Joining us for this segment, we have Will Rhind, founder and CEO of GraniteShares. We're here to discuss how the ETF market could evolve in 2024 in response to high leverage offerings. Will, it's great to see you as always. Welcome back to TradeTalks.
Thank you, great to see you, Jill.
All right, and of course you've been a pioneer in single stock ETFs since 2019, and with the recent shift to 200% leverage on popular stocks like Nvidia and Tesla, what's the motivation behind this increase?
The motivation really is giving customers what they want, which is more leverage in these particular names. Something in Europe we're able to do a bit more than even 2x, but the motivation is just listening to customer feedback and customers typically wanting more leverage for the particular product.
Yeah, well, I mean, the GraniteShares double long coin ETF showed an impressive 641% return toward the end of 2023. What products in the suite do you have your eye on for Q1?
I think it's kind of a continuation of the themes that have been really popular for us. So AI being huge in terms of Nvidia last year, so more stocks in the semiconductor space or around AI. I think you mentioned Coinbase. Coinbase was obviously a huge one, crypto, so maybe looking at, again, some more stocks on the crypto side. And then I think just more of the big tech names more broadly, because the performance has been so good. There's super high levels of engagement and interest in those companies. And so I think it's about bringing that to market.
What's the appetite for the short ETFs?
It's a bit mixed, so it very much depends on the name. So short clearly is very much dependent on the popularity of the particular name and the particular time. So interestingly enough, we have obviously NVDL, which is our 2x Nvidia product, been a huge success, now well over 500 million in assets. We see NVD, which is the 2x short Nvidia, being now extremely heavily traded as well. So not just people taking a bearish view, but people hedging perhaps long positions, but really becoming an ecosystem in terms of those two products. And then we've seen AMD pick up as well in terms of the short AMD product as AMDS. And Tesla obviously continues to always be popular both on the long side and the short side.
It certainly does. How do you foresee the ETF market evolving in response to these high levered offerings?
So look, I think what's happening here, very big picture, is the market is moving more retail, the ETF market. We've been talking about this for years, but now I think it's really starting to happen. So the first sort of foray into that with the fintech apps that allowed customers into commission-free trading. Really now the continuation of that is more investors participating and more interest in these types of trading products.
All right, well, appreciate the insight as always. Thanks for joining us on TradeTalks.
Thanks, Jill.
And thanks for joining me from Exchange. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.